Sweet. Yeah, recording.
Okay, we will go through basic to advanced. Okay, and mostly I make 5 sessions. I mean, there's a subjective wise. Okay,
Okay. Yeah.
and each week I will make one session, and you will rewatch that video at least 2 3 times,
Okay.
and you will practice on your thoughts. Okay, and after the 5 sessions, we will make some analysis sessions. On those analysis sessions, you will understand how you will apply rules on chart. Okay,
Yeah.
and which time frame you follow. So I will means make a 4 session. First 4 session I will make on high time frame, monthly, weekly, and daily.
Yeah.
Okay, and it's just for direction. It means you understand the direction,
Hmm.
and if you understand direction, you can easily trade in low time frame.
Hmm.
Okay, the main purpose is the means you understand the high time frame direction. So after the fourth session, fifth one or sixth one, we will go through the low time frame. Okay, because low time frame is easy to understand,
Yeah.
but the major thing is that where is actually market going, up or down. Okay, it means the main thing is the direction. Okay, uh, this one is about supply and demand, and simple. When supply is high, market drop,
Yeah.
and when demand high, market goes up.
Up.
So market moves between supply and demand,
Okay.
like this one. Okay, on high time frame, but in low time frame you will find lots of up and down. Okay, so formula for how's formula? Okay, simple. For example, if you need 30 milk packets, you will go to the shopkeeper, milk shopkeeper. And he just have the 5 milk packets. So it's mean our demand is high. Okay,
Yeah.
so he can uh, sell in high price. Means he can increase the price. Why? Because he have the low supply.
We'll play. Yeah.
So 5 packet he can give us the $2. Okay, each packet. Because we need 30 and he just has the five. Okay, it's mean our demand is high, supply is low. Okay, now if he have 30 milk packets and we just need 5 milk packets, so it's mean he have the much supply and we have the low demand.
Then don't.
Okay,
Yeah.
so in this case, he can sell in cheap price. Why? Because everybody know milk will expire after 2 3 days. Okay, so he will sell in cheap price. He can sell in 50 cent. Okay, so each packet. So when supply is high, market drop. Okay, and when demand high, market will go up. Okay, so if we are selling from the supply level, so we have this target. Okay, if we are selling here, so this one is our TP level. If we are buying here, this one is our TP level. Okay, and this line, we call this one is a proximal line for buy limit order, and distal line for stop loss. It's for demand level.
Yeah.
And for supply level, this one is a proximal line where we put our sell limit order, distal line for stop loss, and this one is our supply level.
Hmm.
And in supply and demand, we cannot trade on execution. Execution means recent price. For example, we will wait, let market drop first. Okay, create this zone, then we can set here sell limit order and stop loss here. Then we will wait, let market reverse back, trigger on our entry, and then market
So.
means can drop or go means wherever we want to go. Okay, so we cannot trade here, we cannot trade here. If we sell here, if market reverse back, we can lose our money.
Yeah.
So it's better we only trade within zone. Okay, if we do not have any zone, we cannot trade. Okay, it's clear.
Yeah. So just trade in supply and demand zones.
Yeah, so now how and why we draw the zone, which candle actually we look for the drawing the zone. So we have the two type of candle. This one is small candle and these are the big candles. Okay,
Yeah.
so this small candle, we call this one is a base candle. Base candle means a small candle, tiny candle, we can consider as a base candle. So base candle work as a continuation pattern and as a stopper candle. Stopper candle. Stopper candle means if market is dropping, okay, then market created this base candle, market is not dropping anymore, but market reverse back from here.
Okay.
So this base candle work as a stopper candle.
Yeah.
Okay, market is not dropping anymore.
Hmm.
Okay, now on the top candle in the base candle, if market is dropping, then market have next base candle, then market again drop. So it's work as a continuation pattern. Okay, so when we draw the zone, when for example we have the base candle, and if we have the single base candle we cannot draw, okay, but after the base candle we need proper departure candle. We call them departure candle, means the big candles, okay, after the base candle.
Yeah.
If we have this base candle, then we have these departure candles, then we can draw the zone.
Okay.
Okay.
Yeah.
If we have the base candle and we have the small candle, tiny candles, okay, we cannot draw this zone.
Okay. Yeah.
Okay.
Excellent.
We always wait for departure candle. If we have the departure, then we can draw the zone. Okay. How we will understand these departure candles are perfect and now we can draw or not? We have this total size of base candle size total. Okay. So we need at least similar two boxes, one and the two. Okay, it means the total two time of size of base candles. Okay, so the departure candle should close above. Okay, and here then total size for two type size of base candle. Okay, so here we can find two departure candle, we can also find three departure candle, and we can also find just one departure candle, but market should close above. This candle should close above. Okay, then two time of this base candle. Okay, one and the two time of this total base candle.
Okay. Yeah. You get that.
Okay, so mostly of time we find two departure candles, or if we have one departure candle still we can use for the trade, but market should close above here.
Okay. Yeah.
So then we can draw the zone for the demand level. And for demand level, if we have the departure, so we will draw a thick body plus bottom wick. We will leave a top wick, okay, because market do not respect the top wick. Market most of the time check thick body.
Okay.
Okay,
Yeah.
so we can put here buy limit order on proximal line, stop loss on the bottom side. Okay, so for supply level, sorry,
No, no.
for supply level, this one we have departures, and this one we will put stop loss there on means this
At the bottom of the line.
wick, okay, and the bottom thick body. Okay, we will set here sell limit order and we will wait, let market retest this one. Okay,
Yeah.
this one is supply. Okay, these are the basic thing. Now we can start the course actually. Okay, okay, so first topic, how many types of supply and demands we have? Okay, there's a first topic. We have the two type of supply and demands. First one we call the basic one. Okay,
Yeah.
so in the basic one you will find simply valley and the peak. You will find the shapes of base means supply and demands. So valley and peak. Okay, so peak we use for supply and valley we will use for demand. Okay,
Yeah.
so second one is an advanced one we call the CP level continuation pattern and PCP level potential continuation pattern. Okay, first of all we will check the volume peak and then we will check these. Okay, so for volume peak, simple, if market is this one is a V shape. When we draw the V shape we will put means from top to bottom and bottom to top. Okay, it's look like a V shape.
Yeah.
Okay, and this one for the demand level. Okay, now check this one market. If we draw the zone, so market will draw from the top to bottom, then this one is the base candle, then bottom to top. Now if we draw sell, we can say this one is drop, then base. Okay, and rally means something is going upside, so we call the rally. Okay,
Yeah.
so it's a look like as a V shape.
Okay. Yeah. Understand. Yeah. Rally based.
Okay,
Rally.
yeah, draw based rally. So
Or
it's
drop based rally.
this one is demand level, and we will put here buy limit order and stop loss on bottom side. So it's a look like a V shape, and for peak level rally base drop.
Drop.
So it's mean rally base and then drop peak level.
Okay.
Peak. Okay.
Yeah.
Uh, Okay, when we draw the candle, and you will understand this one. For example, if market is dropping, so we have this base candle area. Okay, so rule wise, we have just one rule, simple. This one is total base candle size. Okay, from here to here,
Yeah.
and the previous candle should hit it this the base candle area. Now if you check here, this bearish candle is already in the base candle area. Okay, and the bullish candle or leaving candle, or means buying candle, means he already hit the base candle, and then market close above like this one. Okay,
Mm-hmm.
so it's mean this one is a leg one. Leg one was a bearish leg, then the base candle, and the leg two was the bullish leg. Means a dropping leg and the base candle, and this one is buying leg. Okay, rally leg. So we call this one is drop, sorry, base and rally.
Drop base rally.
Rally. Okay, so it's somewhat demand level, and then we can draw the zone. Okay, now if you check this pair, and we have valley peaks. Now this one is drop base rally. If you look, this one is V shape. Okay, so it's a peak level like this one, V shape. Okay, and if we draw here, this zone is rally base drop.
Rally base.
Okay, it's a
Yep.
base candle. In the base candle you can find 1 to 6 candle, but simple, let me check low time frame. On each pair you can find volume peak. Okay, now if you look here, this one, check this one, it's a draw base rally, it's a V shape. Draw base rally, it's a V shape. Okay, draw base rally. Let me check some clear pair. Check, it's a monthly time frame. Okay, and you can also find even in 1 minute time frame.
Yep.
Okay, each means chart perform their own volume peaks. Okay, draw base rally is a V shape. Rally base drop is a peak shape. Draw base rally, rally base drop. Okay, these are the peak levels. These are the V levels.
Yep.
Okay, even this one is peak level. Rally base drop, rally base drop. So this one is draw base rally V shape. Draw base rally V shape. Draw base rally. It's a V shape. V shape. Even a V shape. Okay, even if you go on 5 minute time frame, you will find volume peak. Okay, check this one. Draw base rally, it's a V shape. Okay, and draw base rally, it's a V shape. Draw base rally, it's a V shape, small V shape. Draw base rally, it's a V shape. Okay, so these are the peak levels. Rally base drop, rally base drop. Even if market created the one more candle like this one, so it would be rally base drop. So means even in daily time frame, you can find here draw base rally. Okay, V shape, draw base rally, draw base rally. But if you want to draw these zones, you will find on the peak levels and V levels. Okay, if you look here, it's peak level. Now check this one. Uh, it's rally base drop. Okay, that's supply level.
Yep.
So it's
Supplies up there.
this supply level. Okay, now this one is our supply level. 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 This one is our supply. Have you seen?
Yep.
Market is retesting and taking a trades. Okay, from here to here we have the pips area, profit margin, profit margin. Okay, profit. And if suppose you are drawing this one, okay, so from here to here we have almost 200, 300 plus pips. Okay,
Yep.
and market took entry, and again market dropped, so 200 plus. Okay, so these are our supplies level. Even market took entry from the top side, and then market dropped here. From here to here market gave us 370 pips. Okay, it's a daily time frame chart. Check that one.
Yeah.
Okay, it's a daily. But on the daily time frame, if you're taking a trade, okay, and you are holding your trades, it's depend on you. I mean, you are swing trader or intraday trader, but still in intraday trader you will make very good pips. If you are selling here and you can closing your position here, you have 380 pips. Okay,
Okay.
so it's very good. I mean, the trades. Well, I'm just giving you an example. Okay, on
Yeah.
the Valiant peak, you can find even in a 1 minute time frame Valiant peaks. Okay, these are the 1 minute time frames. If you look here, that was the supply zone. We will discuss later which zone is perfect for sell or not. Okay, but right now we are just checking the basic one. Okay,
Yeah.
So these are supplies level. Market is taking the trades even in 1 minute time frame. That is the supply level. Okay,
Okay.
means the market is dropping, taking trades and then dropping. Check this one. Even we have the demand level. It's a 1 minute time frame. Okay, that is the demand level. Market is a taking trade. Okay,
Tap that. Yes.
okay.
Yeah.
These are why, because these are the valleys. This one valley, this one valley. Okay, this one is making valley, but our trend line is showing up. So well, market is still going up. So these are the valleys. Okay, these are the valleys. Wow, simple. So okay, that is the valley. Okay, and peak. Now we are going to discuss about the CP level. Okay,
See.
and that means a bit advanced level. So these are the demand levels. Whenever you find the bottom side, so these are demands level. When I you find the top side, these are supplies
Uh,
level. So valley and peak is different thing. Okay, and CP level is different thing. CP
okay.
level simple means, for example, if you want to go out of your country, for example, you are right, means living in New Zealand,
Yeah.
you want to go on India. Okay,
Yeah.
in that case, this one is your destination, means India is your destination, and you are here. Okay,
Yeah.
if you want to go to the India, you need aeroplane. Okay, you need to go to airport, and then you will buy ticket, and then you can go for your destination. Okay, so this area means the aeroplane will work as a CP level continuation pattern. Okay,
Continuation.
and CP level simple. For example, we have the destination, and when we want to set the TP level there, and market will make CP levels. Means it's mean rally. Okay, base. If market drops, so we call this one supply level. But next kind of close above, so we call this one is a CP level
CP level. Yeah.
continuation pattern. Okay, it's a rally based rally, rally based rally, CP level.
Yeah.
Okay,
Yeah.
now if we want to go there. So this one is our TP level. So maximum three CPs level we can use for the trade. Okay, because it's not valiant peak, so simple CPs level. For example, if market going to hit destination, so whenever market makers create the CP level, so it's simple means they wants to more push up. Okay,
Yeah.
they means market will go more up to follow the trend line. Okay, if you see, this one is trend line. So whenever you find CPC level, so maximum three CPC level you can use for the trade. But suppose if you find the fourth one, so it's mean it's overbought.
Okay. Yeah.
Okay, overbought means market can drop anytime. For example, we have one CP, two CP, three CP we used. Okay, it's a different thing market retested or not, but our well, we put our buy limit order with the fresh CP level. Okay, but this one is the fourth one. After the fourth one, maybe market can drop. Okay,
Yeah.
lost their momentum because market already went up. Okay, it's overbought, so market created three CPC level we can use, but the fourth one market can drop anytime. Okay, okay, this one was a CP level. Now the PC level, PCP level simple. We have this destination, market is going up, and created the CP level. Okay, and so market is going up. Okay, now these are the simple CP levels. Now about understand the PCP level. For example, if market is going up, market creating a CP level, CP level. Okay,
Yeah.
now this one is a PCP level. Why? Because this zone crossed top zone, remove the top zone.
Okay.
Okay, so it's mean this zone had the potential. That's why market took the supply. Okay, so these are simple CPs level. These CPs level could not remove this zone, but this CP level remove this supply zone. So it's mean this demand level become as a strong zone or PCP level, potential continuation pattern. Okay, there's one scenario. In second scenario, it's simple. For example, if we do not have any demand level before removing the supply level. For example, we have the supply, and the market is going up with the big candles, and these big candles remove the opposite supply zone. Okay, after the removing the supply zone, if market created here is CP level, so we call this one is also PCP level.
Okay.
Okay.
So the cost of the day.
Okay. Yeah. So this one is also PCP level. Now, if market have just uh, one PCP level before removing this opposite zone. For example, this zone, remove this zone. After the removing the zone, if market created a new CPA level, we call this one is a simple CP level. Why? Because this one is a PCP level. Okay. And
Okay.
suppose if we do not have any zone here and just market removed by these big candles. So after the big candle, if we have the one single CP level, we call this one the PCP level.
Okay.
Okay, before or after market remove the zone that we call the PCP level. Okay, now next topic, let we check some CP level, PCP levels. For example, uh, if you look here, we have these base candles. Okay, 1 to 6 candle you can find in the base candle area. Then we have a departure candle. So it's a one CP level. This one is a second CP level. This one is a third CP level. Okay, but when market created the fourth one, if you look, market drop. Okay,
Drop. Yeah.
so maximum three CPs level we can use. Okay, these are normal simple CPs level. Okay, but here you can find we have the demand level. This one, the bottom one. Okay, we have this value demand level. But this CP level remove these demand levels. Okay,
Yeah.
so it's mean this CP level is a PCP level, potential and continuation pattern. Okay, that's why market reverse back, retested this zone, trigger on entry, and then dropped. So PCP level we use for the trade. Okay, CP level we also use for the trade, but it's depend on that CP level is strong or not, which we will discuss in next session. But overall, I'm just saying that these are the PCP level and these are the simple CP level. Okay,
Yeah.
different between the both difference. Okay, now the next topic, how many candles we can find in the base candle area. Okay, and the second topic is how many shapes of base candle we find. Okay, first of all, we 1 to 6 candle we can find in the base candle area. For example, if market is dropping, so these are drop, so this one is the base. Okay, we can find 1 to 6 candle, we can find two candles. Okay, we can find three candles, or we can find six candles. One, two, three, four, five. But in the range means in the box,
Mm.
rectangle box.
Yeah.
This one, okay. Without the rectangle box, for example,
So the range is the base.
yeah, it's a range in the base. 1, 2, 3, 4, 5, 6. Yeah, these are the CPC level. But if you look, one the base candle is a big one and other one is small one.
Smaller.
It's in the range. Okay, without range, for example, we have the one base candle, the next candle open above and close above. So the third candle is the departure candle. So we can draw these candles like this one. Okay,
Yeah.
bottom wick plus thick body, these are the two candles. It's without the range. These are in the range, means in the box. Okay, without the range. But if you have three candles, one base candle, next base candle, open above, close above, open above, close above. So if you look, this one look like stairs.
Yeah.
Okay, we will not use this one for the trade. It's a kind of fake signal. Okay,
Yeah.
it's a fake signal because we cannot use, we cannot draw like these big box. Okay, if we use this one, this one is a big stop loss, we can lose our money. Okay, it's not perfect. This one we can use for the trade, this one we can use for the trade. 1 to 6. Okay, okay, now on the shape wise, we can find most of the time we find the 50% candle. Okay, then we have departure, then we can draw the zone. Okay, okay, and then sometime we can also find uh, Morbozu candle without any wick. For example, if market is dropping, the next candle is a reverse candle. Okay, and then again market drop. So Morbozu candle is without any big candle. Okay, whenever you find the Morbozu candle, you will find strong imbalances. Okay, it's also perfect for means a trade because we do not have any wick. Okay, so as a thick body we find it's a perfect for our trade. Okay, Morbozu candle without any wick candle, Okay, we can also find the doji candle. Doji candle like this one.
Uh,
Okay, doji candle. But a single doji candle we cannot use for the trade. Why? Because we do not have any thick body, and as market cross this thick body, market can fill this wick area. Okay, so it's not good for the trade. Single doji candle is not good for the trade. But suppose you find one or two more candles with the doji, then you can use for the trade. Okay,
okay. So it's gonna
single
have
doji
more.
is, yeah, single doji is risky because we do not have thick body, so that's why.
Okay.
So doji, single doji. Okay, hammer, we can also find hammer. Hammer is look like
Yeah.
this one is hammer.
Yeah.
Okay, so we can also draw the zone. For example, we have these base candles, so then we can draw the zone like this one or this one. Means it's depend on. Okay, and these are the hammer. Okay, now more engulfing candle. Engulfing candle means first candle
It's a
and the
more.
next candle open above, close below like this one. Okay,
Okay.
these are the engulfing candle, and when we draw the zone, we will use the top weak plus thick body, and we will wait to let market hit the zone and then market drop. Okay,
Okay.
it's clear.
Yeah, it's
And
clear.
when we draw the zone, we can draw we can use the two candles, three candles. Now check here. We have here three candles. Okay,
So
we have here three candles.
okay. Yeah.
We have departure the other. So
Gotcha.
we have here four candles, two candles, three candles. These are four, fifth, five candles. These are candles. These are two or three candles. Means we can use the bottom one, top one. This one was a demand. This one was a supply. Means a weak or strong zone is second thing. So when we draw the zone, we will use this one, top one. We will use this one, like this one, and these are two candles. Okay, it's work as a base candle. These were the base candles. These are the base candles. These are the two candles. Okay, engulfing areas. Okay,
Mm.
strong imbalances. So we can also find these three candles like this one. When we draw, these are two candles, small candle, tiny candle. These are four or five candles, one candle. Okay,
Okay.
it's clear.
Yes, clear.
Okay, if while this session, if you have any question, you can ask me. Okay,
Yeah.
now Marquis created these weekly zone for the trade. In the future, we will use this zone for the trade. Okay, it's a weekly time frame.
Yeah.
Suppose if market hit the top supply zone, then we will not prefer this one. Otherwise, we will use. Well, we will discuss later on these things. Okay, next session. How many zones, type of zones we have? Okay, we already discussed how many types of supply and demands we have. Right now, we are going to discuss about the zones. Okay, so which zone is perfect for trade or which zone is not? So we have four types of zones. So first one we call the fresh zone. Second one we call the retested zone. Third one, multiple zone. It's easy to understand, okay?
Mm.
The fourth one is the original zone. And we will prefer a fresh zone and original zone for the trade. Okay, let we check. First of all, we will check the fresh zone, okay? Fresh zone is simple. If market is dropping from the top, then created the base candle, and then market moved up, okay? So this one is our demand level. We will look right side. Okay, why? Because price is here. Okay, we will look the right side. So it's mean this zone is our fresh zone. Okay, fresh zone means we put it here our buy limit and stop loss here. So we will wait, let market reverse back to retest this zone. Okay,
Mm.
now here still this one is a fresh zone, but when market retested this zone, so we will not say it's a fresh anymore. Okay, it's a retested zone, right?
Yeah.
This zone. Okay, retested zone. Fresh zone with zone market not retested yet. This one is fresh zone. But if market already hit this zone, so we call this one
retest.
retested zone, not fresh zone. Okay. So fresh zone we will prefer for the trade. Retested zone we will discuss in next session. Means which zone is perfect for trade or which zone is not. Okay. So this one is a retested zone.
Mm-hmm.
Now it's a retested because market took entry. Okay. Now about the multiple zones. Now check this one. Market is dropping. Then market also created here a base candle.
Yes.
Okay. The base candle is retesting the previous number one zone. Also market created the number two zone here.
Okay.
Okay. This one is also base candle. Okay. It's a hierarchy form, in the hierarchy form, step by step tree. Okay.
That'll be the new
So
base.
yeah, market is retesting the previous one, but also created a new fresh zone.
Okay.
Now it's this one is second zone. It's a multiple means the number one zone is converted into retested zone. The bottom one, this one
Yeah.
is a retested zone. Number one zone. Number two zone is still fresh. Why?
Fresh.
Because market not retested yet.
Yeah.
Okay,
Yeah.
market created proper departure candle close above, so we draw this zone. But this one is a multiple zone. Means we have the two zones,
Two zones.
one in the bottom, the number two. Okay, no, but here's the problem. Number two zone is created by number one zone because number one zone was a strong zone.
Mm-hmm.
Market could not break this number one zone, but market also created a number two zone. So it's mean number two zone is fresh zone, but it's impacted by number one zone. Okay.
Yeah.
But what about the fourth zone? Okay, fourth zone means here market creates the base candle, but next candle close above. So this one is also our fresh zone, but we call this one as the original zone. Why? Because this zone is not impacted by any previous zone. It's created by itself. It's made by itself. Okay,
Yeah.
but the number two zone is created by number one zone. It's impacted by number one zone. So this one is our original zone. This one,
Mm-hmm.
original zone. Okay. So fresh zone who market not hit it yet, retested zone market already hit it and took the entry. Multiple zone market created means the previous one market retested and created a new fresh zone. Original zone it's created by itself. It's not impacted by any previous zone. We do not have any previous zone. But the number two zone have number one zone. That's why market created number two zone.
Okay.
It's clear?
Yeah.
Okay. Now check this one. Your USD. Okay. Here. We have here that was a fresh zone, but marquee retested. Okay,
So the
when
retest.
marquee retested, it's also created a new base kernel, and because we have the departure kernel, so it's mean number two zone created here. Okay,
Yeah.
then we have the CP level, and then marquee also retested this zone, created new zone. Okay, so this zone is created by the previous zone, impacted by previous zone. This zone also impacted by previous zone.
Yeah.
But we have here a fresh zone. If you look, we do not have any opposites on. Means before this one, we do not have any here zone here. Okay,
So that'll be
which
original.
one? I
Yeah.
mean, the Marguerite tested. Yeah, so it's created by itself. So this one is our means original zone plus fresh zone. But right now, market already hit this zone, took entry, so it's not fresh anymore. It's a retested zone.
Okay. So
Okay, so it's converted into retested zone here. On the bottom side, we had the fresh zone, but market retested yet. Okay, so it's mean they this one is a retested zone. This one is also retested zone. Now, market is actually moving between the two retested zone.
okay.
Okay, so market can also do this one. Technically, market actually showing me market is going to drop more, and that is the actually destination area.
That's your prediction.
Yeah, for long term means there's a much chance the market can hit this zone. But suppose if market cross this trend line with proper one OHCL candle, open high and close below, means it's depend on departure candle. So then we can say now market already means change the direction and market can go up and hit this level. But right now, market is still following the trend line. So anytime market can drop. If suppose market drop, we can set here TP level.
Yeah.
Okay, for the long term. Well, we will discuss later. Okay, now the last topic of this session is about gaps. So what happened during the Saturday Sunday because of weekend days? Uh, if some big news come into market, for example, U.S. attack on Iran, that is big news. The Brexit news is big news. Accident, for example, Beirut. Okay, if you check, that is also big news. So, uh, in the opening time of Monday, market makers can create a fake signal. Most of the time order do not fill, so they can make a gap like this one.
Hmm.
Okay, so whenever you find the gap, so you can use the demand zone before the gap or supply zone before the gap. Okay, why? Because whenever you find this gap area, so it's mean market will fill in the future. But suppose if you have the two zone, for example, this one is a Friday candle, and the opening time of Monday market created a new base candle, then proper departure candle. So still you will consider first zone for the trade. Okay, not this one.
Okay.
Why? Because of this gap. Okay. Now, if we consider, if you look here, means the market dropped from here, market took entry, and why market hit this bottom zone? Why? Because of weekly zone. Weekly zone, you will find the gap. Have you seen?
Hmm.
Look here, we had the gap. Market dropped. Why? To fill this gap
The gap.
from the top to bottom. Okay.
That always
But
happens.
yeah. So if you check one pair, means mostly I give the example on this pair is about the Bitcoin.
Little gaps.
And yeah, so Bitcoin, I gave last trade to my student before you came about the Bitcoin. We can buy from here. Why? Because we have the gap. Okay,
Okay.
and this one is our base candle, and there's much chances market can hit this one and can go up maybe in future. But if you look here in history, look here, we have the gap and market dropped and filled that gap. We have the gap, market dropped and filled, market dropped and filled. Okay, so we had the gap here, market drop. Okay, this one was a bullish gap, market went up and filled that one, dropped, filled, dropped, fill. Now this one was a bullish gap, market jumped up. So it's different thing. That was a strong zone or weak zone. That was a kind of a weak zone. And it means this supply zone because market created this supply in the demand level, negative demand level. Okay, so we do not have the proper gap. Okay,
Yeah.
this one we had the gap, so that's why market retested and dropped again. Market moved that area. Right now there's a much chances Bitcoin can hit up to 35K in the future, near to maybe January or February. Okay, so right now the price 11,000, but overall market is going upside. So I'm still holding my trade from this monthly demand level. Market took entry, okay, and right now still pushing up. Let's see in the future. So okay, now you can if you have any question you can ask me.
So yeah, the PCP and that so that you can do that any time frame.
Yeah, any time
Any
frame
time frame.
means supply and demand. Even while in peak, you can use it in 1 minute time frame,
Yeah.
no 5 minute time frame.
Yeah.
It's depend on which time frame you follow. But I will must say, try to follow these time frame first. Okay, understand this whole method.
Hmm.
Then you can go on 5 minute time frame on H1. You can use any time frame. It's depend on you. If you are an intraday trader, then you can use a lower than the H4. But if you want to swing trader, H4 and the daily time frame. If you want to be a position trader, so then you can use monthly and the weekly time frame.
So what kind of trader? You're a persistent trader, right?
I personally using doing the position trading. I mean the right now. I mean also I sometime I trade intraday trading or swings. It depends on zones. For example, if I know we have the two supply zones.
Hmm.
Uh, this one on the monthly time frame, and this one we have number one supply and number two supply. Okay, And suppose if market removed number 2 supply, so which one is our next target? Our next target should be on top side, this supply zone. So it's mean from here to here we have the wow pips. Okay, we as when I know I do not have any supply level, so it's mean market should hit this level. So that is my TP level. So maybe I can get from here to here 2000 pips. So why I will close my position early? Why? Because I cannot. Why? Because I know these pips I will still have. So, but in low time frame trader, what they do, market actually move like this one, the volume peaks like this one.
Yeah.
Okay. So they do not trust on those trades, but you will also trust on your trades. Why? Because market makers, they only use supply and demand. Okay, and we retailers trader, we use price action, Ilya wave theory, Gans Village, VSA volumes. Okay, and a lot of different indicators, EAs. Okay, but
Okay.
a good trader, he always trade with the market makers. There's a two type of traders. One side on the market makers, another side is a retailer. So market maker always try to hunt our money. These are retailers' money. Why? Because we are following the low time frame. They're creating the fake signal on a high time frame. For example, market makers, uh, they are trading with the zone. That was the first zone market already retest. Now it's dropping on high time frame, on the daily time frame. Okay, market is dropping. Okay, and on the retailers trader, market is dropping, and we are selling. We are selling here. We are selling here. We are selling here. Even we are selling here. When we will sell here means here. So what market makers do? They will start buying
Okay.
like this one. When they will buy and we will think market is going upside, what we will do, we will close our position, sell position here, and we'll start buying here. Why? Because market is going upside and we are following these time frames, low time frames. Okay, and market makers do not look lower than the daily time frame.
Okay.
And when market makers will look, the retailers are selling, buying there, they will sell their position. This will convert into CP level for the market makers. But for the retailers trader, they will still buying, and then what happened? They will finish their accounts here, or they will close with the big loss. That's why if you're trading in a low time frame, you will lose your money. But if you understand direction, whereas this one is of a TP level for demand level, and if you're selling here, so it's mean you can hold your position with the market makers.
Okay.
So it's better you will wait, let market reverse back, retest this zone, then you can trade with the market makers. Then you can make a good money. Okay. So
Okay.
that's why I will means must say you first understand the direction, then even you can use 5 minute time frame. I have many students, they're using the 5 minute time frame, and some are trading very well. This guy was Martins. Do you know what the first? He used, check this one, H1.
Which one?
Okay,
Yeah.
H1 zone. Yeah. So he's using the H1. This one is H4 trade, but he used here H1.
Okay.
Okay, this one is a H4 zone. Okay, but he also used in H1. Means sometime he used the 5 minute time. I have a many time maybe traders, they are using the 5 minute time H1, but the main thing is they are not means no, they know properly where's market actually going, up
Okay.
and down.
So use the bigger time frame to figure out where the direction is, and
Yes, the direction is.
and then
If we understand the direction, where's the direction going, then we can buy on means in low time frame.
yeah, like the video that you get that I watched. It's,
Yeah.
it's follow the big structures, like the big market moves. If you do major moves, you get major profit.
Yeah, the major moves, if you understand the major moves, for example, uh, let me check some pair means who is, for example, market took entry from this demand level. Okay,
Yeah.
market took entry from this demand level. It's a monthly time frame chart. So this one is our TP level. Okay, so these pips we have for buy. Okay, now we can go on low time frame. Let it open. Uh-huh. Whatever. Actually, I did not open yet low time frame, so
No worries.
that's why it's updating. Okay, Now in low time frame, we are taking to trade in low time frame. For example, means right now market already took entry, market created this zone, means a demand zone in the future, and that was the previous one. A market crossed the trend line, and so suppose if market drop, we can buy from here. Okay, that we hedge for. But if you go on 5 minute time frame, that we now check this one, market is going up. So market created new zone. This one is a new zone.
The
Market
new
took
higher
entry.
low
Now the
is
pushing up.
the new zone.
Yes, yes. So these are the new zones. This one is also. This one is also. In the future, maybe market fill this one because of gap, but overall market is pushing up down. These index. Now check this one. Market is going to drop and going to hit this zone. Technically, it's a very perfect for buy limit order. That is the perfect zone for the buyer. Why? Because we have the proper departure candles and strong imbalances. Also, this zone is arrival zone. You will understand in the next topics. Okay.
Yeah. So by limit, you mean like at the bottom of that?
We will put we can put here the buy limit order, and our stop loss is here to here 90 pips.
Yeah. Okay.
Yeah, so market is going to hit that level.
Yeah.
If you see this one, market already took entry. That was the demand level. That is a H4. On H1, means market took entry even on a H1. It's a realigning with the the realignment for the time frame. So this zone is technically weak zone. If market went up in the future, market can break this zone. I will give you these things in the future. But overall, it's means we can use H4, H1 for the trade.
Yeah.
And this one is our, for example, target. It's not perfect trade, but overall. So market is still pushing up. Now market is going to hit this zone. We can still buy. And here's our trend line. Market is still going up. Let's see in the future.
So you said so the charges before.
Yeah, I'm still holding this one. Here market is going to hit this level, so it's mean market is still dropping, but we can buy from the bottom.
Okay, buy from the bottom. Yeah.
Oh, that is the demand level on the bottom side. Okay, that is the demand level.
Yeah.
Market will jump. Market will drop from again here, and the market can do this one.
So let's go up and down.
Yeah.
Up and down.
Well, we will check these things later.
No worries.
So, okay, you can stop recording.
Yeah. Stop. Cool.
Okay.